Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, on this magical Monday for what is going to be nothing short of another jam-packed daily market update. And we're going to be starting this market update out by addressing some of the doom and gloom headlines that are circulating, largely on the back end of readjustments to economic forecasts based on what Trump is doing, and also consumer sentiment, which is basically COVID 2008 level lows. Now, we're going to flip that on its head and suggest that actually that's probably not such a bad time to enter the markets. And certainly we haven't seen a COVID 2008 style crash that may warrant that. And sentiment is usually this low at the point of the crash, at the low. And it's there again today. So I am, as many of you know, far more optimistic on Trumponomics than many people may be, despite all the doom and gloom headlines. And I actually think, and Scott Bessent said it best himself, that what is happening right now is a kind of period of uncertainty, a detox in regards to a new regime from Bidenomics, government spending, to sort of private spending in regards to Trumponomics. And I am far more optimistic than I think many people are. And this is all relevant to us as cryptocurrency investors because we are correlated to the risk sector generally. S&P 500 broadly. We'll look at the NASDAQ, we'll look at the S&P and Bitcoin and just show you that the pullback that we've experienced is actually normal, and we've experienced multiple of these across all these assets since 2023, and the markets have just continued to climb. And I believe they're going to continue to do so. And then talking about Scott Bessent, we've got some comments from him. He says, House is heading off a guaranteed financial crisis. So everyone's talking about this recession like it's going to happen today. And I would argue that it's not, markets don't top on fear, they top on euphoria, typically. And I don't think we've seen that yet. And I think what's happening right now, when I ask, and I've done this with my Patreons previously, we looked at a load of economic data and we said, is there anything in this economic data that suggests we're going into a recession or we're in a recession or anything of the sorts? And actually the answer is no. A lot of the fears right now, I believe, are essentially based on uncertainty around Trump's policies. And you really are in one of two camps. You either think they're going to be good for the US economy and thus, you know, things like lowering oil prices, etc., which we're short oil. And thus there's going to be a kind of economic boom, if you will, or a good time for the markets. Or you're in the other camp and you think his policies are going to be a total disaster. And then you probably are expecting a recession. And neither one of us can say we are right just yet. It's just my own sort of thesis. But to start this daily market update off, let's address some of the kind of negative headlines that are sweeping us on this magical Monday. US and global economic outlook cut by OECD as Trump trade tariffs weigh on growth. Global growth is expected to slow from 3.1% in 2024 to 3.2% in 2024 to 3.1% in 2025 and 3% in 2016, according to the OECD. It had previously forecast 3.3% growth this year and the next. Now, those metrics and forecasts can change rapidly, and it's not like there's any kind of, that is not recessionary in the sense that a recession is defined by 2 negative quarters of growth. There's nothing recessionary about that. They've just repriced it by 0.2% based on uncertainty that if there's any kind of resolve to that, remember the Fed rate decision is on Wednesday and we're likely going to get forward guidance on monetary policy, that can readjust once again. So that still isn't pointing at a recession. It's just pointing at a slowing down in their now forecast case. Remember, it's a forecast. It also says the US annual GDP is also projected to fall to 2.2% in 2025 and 1.6% in 2026, down from earlier forecasts of 2.4 and 2.1% next year's. A series of recent announced trade policy measures will have implications for the economic outlook if sustained, the OECD said. And they're just weighing up the tariffs, not really more broadly anything else. So neither of these are recessionary. they're just fears, and there's a repricing going on, and the uncertainty is really sort of playing out in regards to this recent pullback that I think there's a resolve to and continuation takes place. Also, CNBC Daily Open, US consumers are feeling bad and expect inflation to spike. Well, we're not seeing inflation spiking as of yet. We did see a bit of an uptrend, but now it's sort of basing out and coming back down again. And I think I want to reiterate some of what we said in regards to the 1970s resurgent double inflation hit individuals. We actually said that that wasn't going to be the case because it's not the 1970s, and we're yet to see data that proves this. The US consumer hasn't felt so glum about the economy since November 2022. What happened in November 2022 when consumers were feeling that bad? This is November 2022. That was the perfect bottom. I mean, are you getting the picture here in regards to the majority often never being right? I mean, there was Michael Burry in 2008. The rest were wrong. Markets don't top on depression. They top on euphoria. And that's still to come, in my opinion. And we think crypto is going to be the best performing asset in that environment. According to the survey, the University of Michigan, that when annual inflation was about 7.1% and the Federal Reserve Chairman Powell acknowledged the chance of a soft landing, which we said was likely, or no landing, we agreed with Larry Fink going into 2024, where inflation is tamed without economic slipping into recession, has narrowed. Okay. Inflation at 2.9%. With US inflation at 2.9% in December and gross domestic products expanding to an annualized 2.3%, during the fourth quarter last year, it seemed like the Fed was, in fact, going to steer the economy safely down the landing strip. And then it's talking about sort of treasuries, or the US Treasury, and how he's adding to woes. US Secretary Scott Bessent said Sunday, there is no guarantee we won't be in a recession. And they're putting a negative slant on that. We're going to play the clip of what he actually said, because how can he guarantee, and he basically brings up like the COVID event, how could you guarantee that something like that's not going to happen? So, and we'll look at retail sentiment. This is from Mohammed El-Arain from Torcent Slock, Apollo's chief economist. Consumer sentiment is declining rapidly, both for households making more than 100,000 and less than 100,000. See the first chart. Let's take a look at that in just a second. In fact, let's take a look at that as we go through. So this is consumer sentiment from both over or under 100,000 in the US. And this is lower today than it was at the peak of March 2020. And if you look here at the sort of bottom of 2022, it was also at a low. So low consumer sentiment often should be ignored, in the sense that also if you look at the sort of low consumer sentiment, this wasn't going into 2008. If you look at this as an example, it was post 2008. And what did the markets do from then on? Let's use this as an example. Okay, let's not use this example because this is the US 100. Go to 2008. So this is where sentiment was at its lowest. And look what happened then. It was the wrong time for sentiment to be at its lowest. Surely up here would have been the better call. Also, consumers worried about losing their jobs are at levels normally seen during recessions. See the second chart. Now, why might that be in regards to Doge and government being one of the largest employers and them looking to essentially cut frivolous spending? There's a lot of wasted money when it comes to government jobs because government is a self-destructive mechanism in regards to funding itself. Actually, the more problems there is, the more money it gets. And this is why it just doesn't work. But you can see also, this is well elevated from 2008, the 1990 crash, the dot-com crash. You know, this is completely skewed. And then they go on to say a record high share of consumers think business conditions are worsening. See the third chart. Okay, this is very interesting. You know, this was also the case in 2020. And household income expectations are declining. See the fourth chart. Again, this is typically called lows in markets, believe it or not. So we're flipping this data on its head. Inflation expectations are rising at an unprecedented speed. See the fifth chart. I don't think there is a fifth chart, by the way. And the bottom line is that consumer sentiment is deteriorating at an alarming rate. And are the consumers right about markets generally? Well, looking at that sort of set of data, actually, when it's been at a low, typically that's been a great time to enter markets. And we've not had a March 2020 crash. We've not had a 2008 crash. I think there's a game being played, likely by Trump and his administration, that actually this is all designed, and they want this kind of low, this uneasiness, so that they can, you know, really catapult it in the direction I certainly believe it's going, and we have a lot of technical merit for. You got the likes of Peter Schiff. Any opportunity to highlight gold over Bitcoin, he'll take it, even though Bitcoin has massively outperformed gold. But gold doing sensationally well. It's made a number of targets for us. The Nasdaq is down 12%. If this correction turns out to be a bear market, which nobody knows for sure, but everybody's kind of expecting now, I think we're one of the few people that are still staying very bullish during this time period. We'll talk about that in just a second. And the correlation is 12% decline in the Nasdaq equates to a 24% decline in Bitcoin. Holds when the Nasdaq is down 20%, Bitcoin is at 64K. This is all hearsay. Look at the S&P 500, for example. You know, we've done this exercise with you. This is still in the realms of normalcy, given the pullbacks that we've seen previously. We've had greater pullbacks, and we've just continued to climb. And at every single one of these, you've had the likes of Peter Schiff, the likes of all the bears sort of come out. Eventually, they'll be right. We just don't think it's yet. And we think markets have got a good time generally ahead of them. And I'm yet to have anybody bring any kind of convincing data to me other than speculation. Markets largely are speculation in regards to stats that are showing we're in a recession. Even in regards to Bitcoin, or that we're going to enter a recession. Even in regards to Bitcoin, you know, this is just still in the realms of normalcy in regards to a pullback, et cetera, et cetera. And Scott Bessent, of course, weighing in. We've got a couple of clips from him. One is directly related to crypto. Treasury Secretary Bessent says White House is heading off a guaranteed recession. Treasury Secretary Scott Bessent says Sunday the Trump administration is focused on preventing a financial crisis that could result in of massive government spending over the past few years. What I could guarantee is we would have had a financial crisis. I've studied it, I've taught it, and if we'd kept up these spending levels, that everything was unsustainable, said Bessent. Meet the press. We are resetting, and we are putting things on a sustainable path. He goes on to say, I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal, he said. What's not healthy is straight up, and that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 2006, 2007. We wouldn't have had that problem. I'm not worried about the markets over the long term. If we put good tax policies in place, deregulating and energy security, the markets will do great. Besser added, I say that 1 week does not the markets make. And this is it. People jump to conclusions way too soon. And this is why we look at weekly charts on a logarithmic scale, because it just quietens things down. We've got a concession of clips now. Let's dive into him essentially saying this, what CNBC reported on. Then we've got another clip of him talking about crypto specifically, another clip from a senator. And then we'll wrap things up with the mysterious insider whale and a look at CoinShares report. So let's get into this clip.
Secretary, can you guarantee the American people here and now that there will be no recession on President Trump's watch?
Well, Chris, you know that there are no guarantees. Like who would have predicted COVID? Right. So I can predict that we are putting in robust policies that will be durable. And could there be an adjustment? Because I tell you that this massive government spending that we'd had, that if that had kept going, we have to wean our country off of that. And on the other side, we are going to invigorate the private sector. I had a meeting with small bankers last week, and they are ready to start lending. Yeah. And I can tell you that Main Street is going to do well.
So what exactly do you mean when you say adjustment? Could that potentially lead to a recession?
There's no reason that it has to, but I can tell you that if we'd kept on this track, what I could guarantee is we would have had a financial crisis. Mm-hmm. I've studied it, I've taught it, and if we had kept up at these spending levels, everything was unsustainable. So we are resetting, and we are putting things on a sustainable path.
So we did look at that in the form of the CNBC article. You know, I am far more optimistic. And it's going to really annoy me when everyone then flips optimistic when the price recovers, because we've gone through this so many times, and this is the value of this channel, perhaps. We're not news driven, unless there's a concession of news, and that also translates technically through the charts. And also, if you guys want to take a step further, or your journey a step further, do become a Patreon, because it also helps to be part of a community that's working towards the same endeavors. 70-80% of my portfolio is literally hundreds. I think the sort of average is about 200 and something percent up. We've got positions that are down in more speculative altcoins, but generally we're doing well out of an interesting market and an interesting time to be alive. Let's dive into what Scott Bessent had to say in regards to the crypto industry specifically.
It's me now, Secretary Bessent. Thank you so much. Look, I think people are getting into cryptocurrency in a very big way. It seems like it's something that's here to stay. So from your perspective as Treasury Secretary, how does it fit into the overall U.S. economy, and where does the government stand on regulations?
Good. Well, thanks for having me on the show. And as I think this administration has made abundantly clear, digital assets are here to stay, and we are going to make the U.S. the digital asset hub of the world. For the past 4 years, the crypto community, digital assets, the administration retarded their growth, and we are set to accelerate that through a positive partnership. And through smart regulation, Senate and House are both pushing through very sound, safe bills to bring crypto and digital assets onshore in the U.S. and to make sure that the U.S. is both the financial and the technological.
So that's all still at play. There's some fundamentally, unbelievably bullish undertones to all of this. Let's now play a clip. On the back end of the Stablecoin Act, the Genius Act, this, of course, is from a senator. Let's dive into this.
Cryptocurrency is here to stay. We want to innovate in America before we overregulate it. We had a framework put in place led by Senator Haggerty, Senator Lummis, myself, making sure that the stablecoins, to understand stablecoins, it's kind of like a traveler's check on the blockchain. It gives people more access to the resources, and it will reduce the cost of doing business in America. A leap in the right direction. We will be the country that leads in the cryptocurrency footprint for generations to come. It's another promise made by President Trump on the campaign trail, another promise that we're keeping in our legislative agenda and priorities. The American people can rest assured that democratization is here to stay, and it will get better and better as we move these bills to the president's desk to be signed into law.
And actually last week was an amazing week. The Genius Act was huge. Stablecoins are the evolution of money. They are essentially CBDCs. There's not really much difference as far as I'm concerned. And there are certain cryptos that are going to enable that. Also something I looked at with my Patreons. Let's discuss the insider whale who was short by a 40x long yesterday. He's now actually long on hype. So the whale who is 430 short on Bitcoin just went long on hype and long on Melania. I have a sneaky suspicion that this whale is the hype protocol itself, because I don't think anybody is stupid enough to put that much money with 40x leverage. I don't think that's the case. You can see, obviously, he's a lot smaller on the Hyper Melania. But I think this is likely the exchange themselves. I have no proof of that, just theory, that are ultimately doing this to bring attention to their protocol. And his liquidation price nearly got hit, yesterday. It only needs for Bitcoin to go to 86, and he's out of here. Let's maybe take a look at how the pre-market is opening, or some of the futures for the S&P 500, giving you a bit more of an inkling in regards to how today is going to fare. The NASDAQ futures are somewhat down, and the ES also down. We'll see. I know there's some big pre-moves going on. I wonder how Tesla and Nvidia are opening up today. Go over to the meeting. We've got Nvidia slightly elevated, Tesla slightly below, and we've got Amazon still yet to make a concession of targets for us. And this pullback's still within the realms of normality in regards to Amazon. CoinShares weekly reports. This is a jam-packed one indeed, guys. Volume 225. Digital asset fund flows weekly reports. And digital asset investment products saw the 5th consecutive week of outflows, totaling $1.7 billion, bringing the total outflows over this negative funk to $6.4 billion, while also marking the 17th straight day of outflows. Bitcoin saw a further $1 billion of outflows. We'll say it was 978 million, bringing total outflows over the last 5 weeks to 5.4 billion. That is about what is that? There's $40 billion, or there was. There's now about 35. It's not that significant. Of course, the $40 billion of inflows, $5 billion of outflows, kind of natural. And I think a lot of that's on the repricing of the uncertainty, just like we're seeing with the S&P. This will get added on eventually, I think. Binance saw almost its AUM wiped out by seed investor exiting, leaving just 15 billion AUM in terms of Binance's product. Despite that, XRP is still bucking the trend, and something big for XRP is coming, and I think we're going to get sort of resolution or clarity on the case. And ultimately, something like XRP, XLM are really going to play a role in enabling this kind of evolution of money in the form of stable coins and more broadly the internet of value. That's it from me, guys. I'm going to love and leave you. Try and remain optimistic in the face of pessimism and declining prices that are very normal in my opinion. Again, I'm yet to really have somebody put forward the argument as to why we are going into recession that kind of makes it somewhat concrete. It's interesting because you see those kind of headlines and thumbnails that say sell, and it's literally at the perfect bottom of this pullback. They really should have been saying it pre-pullback. Anyway, that's it from me, guys. I'm going to love and leave you. Thanks for watching as always, and I'll see you in the next one.